On Small Cap Power, we're with Ryan Irvine, president of Keystone Financial at the Money Show, Toronto. Ryan, thank you for being with us again.
Nice to be back with you guys.
Yeah, so let's discuss your track record first and foremost, and some stock picks you've mentioned to us in the past, how they've potentially performed.
Over time, everybody, like I always say, has their winners and losers. The way we structure our returns, we calculate how well our individual stock picks within the given year have done. Over the past 18 years, our annualized return has been over 30%. We've been tremendously happy with that. You can't promise that going forward, but we can promise our clients that we will use and utilize the same methodology, finding undervalued growth at a reasonable price stocks in the growth area of the market, small cap area of the market, which is what we specialize in.
And how do you determine the best time to get in and get out?
Well, I mean, it's all based on fundamentals. Now, we have found some stocks that are a better buy when it's up 100%. So it really doesn't matter where the price is, it matters the price relative to the underlying earnings and cash flow of a business. So as long as it continues to trade at reasonable valuations relative to the market, relative to its peers, and relative to its cash flow underlying, we'd love to hold a stock like Warren Buffett would forever. And we've done that with a stock we talked about here just in the fall when we were on your show, Boyd Auto Body Group. We've held that for 9 years now, since it traded at $2.30. Today it trades at $94. You cannot get winners like that all the time. It was probably a better buy at $10 than it was at $2 fundamentally, but you know, it's strange when you look at it and say a stock's a better buy at 10 than 250, but it's all for us where the business is and fundamentally what the cash flow is relative to earnings. Right. And you can find good buys, you know, at higher prices even than you think.
Well, how do you stay patient? You know, how do you hold it for 9 years at a time?
Experience, like I think that does it. We've been doing it for almost 20 years now. And if you just trust in the numbers, and every time you look at a stock and do a new update on a company, you look at it and say, okay, if this is the first time I found this business, would I want to buy it now? And you don't just hold it because you're holding it. You'd say, would I want to continue buying this right now? And you have to kind of not look at the past and just look at where it is and what it's going to do into the future. And it really is an effective tool to just look at that and look at it as it is in the market now and where it will be going forward. And that's how we determine whether we want to hold a stock.
Gotcha. Now with the Money Show, you hold a do-it-yourself seminar.
Yes, we do.
But how do you make sure, I'm going to play a bit of
devil's advocate?
Devil's advocate,
yes.
Exactly. How do you make sure that you're providing people with what they need, and how can they trust you?
I believe that we do great research. We look at, myself and Aaron, who's another analyst that works with us, twice a year we go through 3,500 stocks on the TSX, looking at every stock, every MD&A of all those companies. We talk to management teams. It's experience, it's a track record, and it's also just the fact that we look at that many statements and really don't have much of a life outside of this,
right?
It's
like, what else do you do?
It's true, you don't. It takes like 2 or 3 months to go through it
right.
each time, so that's why we only do it twice a year. But I think that gives us a grounding in knowledge in the companies on the Canadian markets, and we also do now into the US. Mm-hmm. So if we see a trend like, say, the Internet of Things, right? Can we find a company that's benefiting from that? And if we've looked at 3,000 companies, typically a company plays in that sector. And that was a past recommendation we've made on here, is Photon Control, which services that sector. Mm-hmm. And that's how that came to be. We saw a trend there in that segment. Now let's find an undervalued growth stock that's, you know, under the radar. And you know, because we went through 3,500 companies, Photon
right.
Control comes to the forefront of that, and we buy it at a reasonable price, and it's done well since then.
What has come up for stock picks at this current time in your research?
One of the stocks we just re-recommended is called Sylogist. It's SYZ is the ticker symbol on the TSX. Trades at reasonable valuations. What the company does is they are a SaaS or software as a service company. They use Microsoft's Azure platform, and they sell to nonprofit, public sector, and educational services. Anything from like the Red Deer School Board to a division of GE. And they sell workflow solutions and back-end accounting solutions and the like. Now, we love the valuations on the company and the growth that it's produced over the past 5 years. We think that can continue going forward, but it's 40% growth rate in compound annual revenues, which is tremendous. EBITDA, or cash flow underlying the business, has grown over the past 5 years from 3.9 million to 13.5 million last year. So tremendous growth there. It's trading at, right now we forecast it'll earn around 61 cents this year. That's about 13 times earnings. If you look at peers in the US, they trade at 30 times earnings. So if we even gave it an 18 times multiple, which would be like the market trades at about P of 18 to 20 right now. So if you give it that, it would have a target for us of about 12.25 to 12.50. It's about 44% from where it is right now. That's a good growth rate over the next year. It pays us a 3% dividend.
Great.
They got a ton of cash in the bank. They'll make some acquisitions or buy back shares. Those are the type of businesses we like to own. Yes,
yeah.
for sure.
Great. Any other stock picks?
Sure. I mean, if you want a company that's based in Ontario, that's been around for 100 years, this is its 100th anniversary this year. It's really unknown. It's called Hammond Power.
Okay, trading as?
HPS.A is the symbol.
Okay.
Yeah, I mean, it's a unique business. They make transformers for the electrical industries, not like transformers like Autobots and Decepticons, but like transformers, what you use to step up power for it to travel long distances, or step down to bring it into your home, and you can use it in an outlet. This is a company that we actually recommended way back in 2000 when it traded at 65 cents. We sold it 5 years later at 13 bucks. We're in right now again at about the $7 to $8 range. They built out capacity about 8 years ago, too far in our opinion. They were running at too low of a throughput level, so they didn't drive profitability to the bottom line. Now, they built that out on the instructions of their clients in the mining and resource industry. That demand didn't come to fruition. It is starting to pick up again, and they've picked up demand in other markets. So the last quarter, they had about 70% throughput. They also made some tough decisions in the first quarter where they cut some costs, rationalized operations. So they had a tremendous growth quarter in the last quarter. They went up from earnings of 5 cents in the same period last year to 25 cents, so it's like 400% growth in earnings. It's trading at about 11 times earnings, our forecast earnings going forward. There is not much on the market that trades at that level when you see the average PE of 18.
Right.
Growth at a reasonable price, pays a 3% dividend, and really is unknown in the market. We think can benefit from an infrastructure boom. On top of that, there is more activity in the mining sector. They finally are picking up clients there. Yeah, you've seen that. So they're going to see activity there. They're also, there's a huge boom in the solar market in India, and they're selling these transformers to that market. They're powering the market with solar as opposed to using like the traditional methods. It's cleaner, better way to do it. And this is playing an ancillary role in that market. So it's supporting that market. There's tremendous growth they've seen in India. It's a smaller percentage of their business, but the growth there adds a growth element to a business that's been around for 100 years, right?
Thank you so much, Ryan, and we can learn more from you from keystocks.com.
Yeah, just go to www.keystocks.com and you can find our independent research there. Become a client today, we always say that, right?
All right, thank you so much.
Good, thank you.